Hello, my name is Eddie Toftby. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me introduce today's longer term chart. Today I'll be looking longer term at Chicago wheat. A large part of this commentary has written itself, or rather is a continuation higher from a pattern I'd pointed out 4 years ago. It is a big picture pattern, and this is what I wrote at the time, and I quote, "The interesting concept of a descending scallop pattern for the whole of the 2012 to date action so far. This pattern is not complete, but has an interesting dynamic. The slope of the move down from 2012 to 2016 is the first element, and it looks like the long slope of an Olympic ski jump. 2017 to date is whether the market turns up at full speed and flies off at the highest point, currently in this case the 613 high from last August." End of quote. That August refers of course to the 2018 high. Anyway, this is a further piece from 4 years ago about the descending scallop pattern. I quote, "Now, descending scallop patterns can be both bullish and bearish. In the case of a bullish pattern, the market takes another more ragged and shorter dip before accelerating higher. A typical move up would be about 1/3 of the length of the long ski jump onto the highest peak. In this case, it would be about 811 or about point X. It's too early to call it a target as the market may still expand the rise." End of quote. Well, it seemed excessive back 4 years ago, but it certainly turned out to be a true pattern as prices reached point X, which turned out to be indeed target X, at the 811 area back in November of 2021. Where it may become even more interesting has been how this descending scallop pattern morphed into a rounded bottom pattern for 2022. I laid out the following on this at the time last year, and I quote, "So, things to look out for now. The rounded bottom should ideally see the market up to test the 2012 high at 953. However, as this is a standout high, I would finesse it into looking at the late 2012 highs between 930 and 953. I know it is a wide band, but then this is a big long-term move." End of quote. Well, this idea of a long-term pattern turned out to be true sooner than I thought. A move up pushing through 953 by February last year. However, that wasn't all. You see, I had detailed soon after my annual commentary that the right-hand side of the rounded bottom, specifically the action between mid-2018 and late 2021, the dip in the last couple of months, and also January 2022's actions, this part of the rounded bottom could turn into an ascending scallop pattern, with what seemed at the time the extraordinary target X1 in the 1322 area, just over the 2008 all-time high of 1349, or just under, I should say. Well, events took place that caused all of this to happen, and even more, with a new all-time high of 1363 in March last year. However, such a move up was not sustainable, and prices have dropped back to the old target X zone with a 2-month blip up in September and October. And it is this blip that I wish to finally discuss. See, I have looked closely at this blip and a much smaller one in late 2021, as well as the big move up and down during 2022, and I have come to see it as a possible new, if extraordinary, pattern. It seems we might have an October 2021 to date possible very, very thin and tall head and shoulders top. I am not wholly convinced, as it is such a lanky giraffe of a pattern, but it is there with a seeming fairly flat neckline in the 738 zone, just below where we are. Right now, we appear to be in the last throes of creating the second shoulder. This pattern is deserving a very close look over the next few months of 2023, as it is currently penetrating the core 2020 to date uptrend. That's currently at 796. The next support underneath, well, that will be interesting, as it is the 50% Fibonacci line, the absolute Fibonacci line, at 682. Thank you for listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Service International Limited. And here comes the final bit.